Hello, you're welcome to market review for the month of May. No, that ended May 29, 2020. In this course of our discussion, as we are reviewing the month of May, we're also going to preview the month of June, the coming new month, so that you know how to take advantage of the market. At the same time, what are likely to happen in the month of June. But we need to start to see what happened in the month of May and see if what we discuss at the beginning of this May is actually what happened, also to go a long way to guide you. Because I know that as many that are following us on our platforms, on the social media, on our site, on the newspaper, I know you are getting value for what you are doing. If not, you should let us know so that we can also double our effort. But I know that for the month of April, for the month of May, I think as we have discussed in this forum, you have gotten value for your time, value for your money, because activities are looking the way as we have discussed. But and you know the best and get back to us. For the month of May opened at 23,021.01 and they closed the month at 25,267.82. That means that the market has gained in terms of point 2,246.81, representing 9.76. That means for the month of May alone, the market recorded 9.76. That tells you that the market has outperformed this index we're looking at now, has outperformed a lot of many investment windows within this period of May alone. If the market index is giving you 9.76, the individual stock on the exchange, some have recorded above 20%. For the month of this May alone, 23 stock recorded 20% and above, which is far above all that you expect to get in any investment window for a whole year. That means if you are in these stocks and you know what you are doing, you would have made money for just only this. What of those that have made 10%, 8% above what we are seeing today in the money market? Considering also the recent cut in MPR, what will happen in that window? You as an investor, you should know how to align your portfolio. At least I have said it earlier, you need to know how to align your portfolio. Within the month under review, the sectoral index were all green. All the sector index were green. It tells you how, and this is the month that it say that sell in May and come back to the market in October. And our Nigerian market has so far in the last 5 years defied this mantra in the investment war, on the traders war, both locally and internationally, that sell in May, come back in October. But our market for good 4 times in 5 years has defied this thing. This mantras of sell in May. It tells you, that means you as an investor, you start understanding how our local market plays, how our local market moves, so that it will go a long way to guide you when to be the market, especially now that we are seeing global and the local economic reset. You need to know, and you see that the Central Bank of Nigeria is also making moves. It means that the recovery of this economic situation come fast. That's why they are doing adjustment, intervention here and there. This all we're going to discuss so that we will know how to prepare ourselves for the month of June. And I said that all the sectoral indicators were in green, and this was led by industrial goods. And industrial goods, where Dangote cement is there, BUA is there, and these are among the top most capitalized stocks on the exchange. And when they are gaining, it's going to push the index of that sector up, and the recorded gain, despite that the Dangote cement was adjusted for a dividend of 16 naira within the month, still it gained back after the adjustment of that dividend. You can see that and BUA also declared a dividend of 1 naira 75 kobo, and market reacted that he moved from as low as 31 naira 10 kobo to close the month at at 42 naira. You see that gain. That's why we are seeing that the industrial index is the one leading the market for the month. I can say the banks also have not done badly, but if you look at the pension index, it tells you the importance of dividend in our market. You see, it's the next toward to the industrial sector, gaining 16.10. It tells you that people are really after dividend, knowing that the dividend yield in our market now is above an average of 5.8%, which is also good for investor. And you see that if you're having an average dividend of around 5.8, and the other instruments are giving you just for a whole year, you are getting 3.8, 3.9, 3.6 for a whole year in the money market. That means it's a signal or an indicator that funds, yes, the big boys or the pension fund might not be looking at the market now, but I'm telling you, this yield you are seeing will be an attraction. It will be an attraction. Why? If the economy will continue to recover with all this intervention we are seeing, we are going to expect a longer bull run when after a little correction we are expecting, because the impact of the intervention will also put the economy on a recovery drive, and that recovery drive will also impact on the companies that are listed on the exchange. Even inflation, we are saying, if prices of equities are going, that's why equity is the best way to hedge against what inflation. Because if the prices of goods are going up and these companies are listed and their prices are going up and also they are selling, automatically their numbers, which is the earnings, will also be going up. In the process, your investment in that company will not be overtaken with inflation, because the market is moving with inflation. The company's earnings is reflecting inflation. On that note, your money is safe. That means even now that we're saying that inflation is almost at 12.34, and you as an investor in the equity market, this will not affect your investment or your portfolio. Why? Because you are hedging against what inflation. Now you are getting some dividend yield that is above even that 12.34 in some equities. It tells you that there is still no opportunity in the capital market for you to take advantage of. As we're discussing, the next one that is also there active on that sector, I've mentioned industrial sector being the leader, being the one that led the gainers chart. As I said earlier, that they are all green. And the next one there was banking sector. The banking sector is the most active sector on the exchange. And it's not only that. An article I wrote, and I said banks as economic indicator to consider as a trader, or to watch as a trader or investor. Whatever that happens in the bank is going to affect the economy, is going to affect the market, knowing that the banking is like the bellwether of the market and the economy. Yes, now that they've adjusted the MPR, the banks will likely slow down a little before it will bounce back, but that will be after we have seen the second quarter of these banks and know their direction. But the lower the price of this bank, the better, I will tell you. But the banks are always there. The bank for the month of May, the banking sector index, which is NSE banking, gained 11.98, which is good for the quarter, for the month. And at the same time, knowing that this same month, towards the end of the month, there was what we call a little slowdown, and that little down we experienced high volatility up and down. And these banking stocks we are affected for the 2 or 3 days after they have rallied, and everybody wanted to say that this. No, I said it earlier that this banking rally will not be sustained, and it came down. But I see that in the new week, in the new month, the banks are likely to adjust down, especially after seeing their number before it will take up again. That means you as investor, you should know how to take position now. And what we call sectoral rotation now. People are moving to different sector. We are coming to that when we are previewing the month of June. This for the market performance for the month of May. And for the gainers for the month of May, Nimet topped the gainers chart, gaining 88 points. Let me bring it up so that you can see it clearly yourself. This is the gainer chart for the month of May. You can see that Nimet topped the gainers chart, gaining 88.33. The stock that moved from at the beginning of the month was 60 kobo and closed the month at 1 naira 13 kobo. You can see Unilever at the beginning of the month was selling for 10 naira 50 kobo and closed at 17 naira. Investors have gained 61.9% just in a month. Qt's knowing that QT's end of the year was April. They released their full year. They are paying 12 kobo for the dividend, and the price has rallied from 1 naira 20 kobo to 187. Returning about 55.33. And in the funny thing that if you look at this gainers chart for the month of May, you see that the healthcare sector dominated the top 10. You can see Nimet was the first one there. The fourth one on the chart was GSK, which GSK was the fourth one there. So if you look down here at the 7th position or the 6th position, you see Fixing Healthcare. Don't forget that the May and Baker was adjusted, still on the gainers list, but not among the top 10 that we are considering now. It tells you that you, as an investor or trader, you should know that this sectoral rotation we are seeing now should also guide you. Should also guide you. I know why I said so that you will know where to be right now. And I was saying, GSK gained 51.4% for just a month, moving from 5 naira 35 kobo to 8 naira 10 kobo. Don't forget this bank. When the result came to the market, when Police Microfinance announced 20 kobo dividend, the price moved from as low as 1 naira 25 kobo to as high as 199 before profit takers brought the price down, and it closed the month at 1 naira 81 kobo, gaining 44.80 for the month. Nigeria Brewery is also among the top gainers. If you also look at this chart, you can see that we have about 2 consumer goods, Nigeria Brewery and Unilever, as from the sector. Also, if you look at the oil sector, you see that we also have 2. But if you look at this sector, you can't see the active banking stock apart from the Police Microfinance. It tells you that for this period, what the banks are gained, yes, they are among the top gainers, but they are not among this among the top the gainers for the month, but not among the top. But among the 23 stocks that gained 25%, the banks and stocks are there. But for this top gainers, that these are from what the healthcare, the food and industrial sector that just really the top the gainers for the month. But if you go down, I'll tell you for the month of May, just about 66 companies were gainers, just only 9 losers for the period. It tells you that the market for the month of May was actually bullish, and you will confirm the way prices move for this period, knowing that this is the period that many blue chips were having their qualification days and funds were coming to take advantage of all those dividends, and company also announcing good dividend considering their low price and their yield were high. These are the factors that also, don't forget that during this month of May, the oil price, despite still low, but the recovery was stable in the month of May, moving from even as low as 23 to almost to $35 or above. On that, you see, that sentiment again supported the market locally. If you consider other markets in the world, most of them were oscillating, but our market had a good uptrend in the month of May. For those stocks that are on the loser chart, you can see that NEM Insurance topped the loser chart for the month of May, losing just 9.09. And don't forget that within the month also that the price of NEM was adjusted for 15 kobo dividend. Then Corvale Business Solution was among the losers, also losing the same as NEM, 9.09. Then the next one was Lasaco Steplat just marginal, lost 3.64%, closing at 476.40. If you see the stocks that are on the loser chart, these are just only 9 stocks that lost for that, and you see they are very, very marginal. None of them lost more than lost up to 10%. It tells you that the market is actually bullish. Yes, we'll go back to the chart now. Now we're looking at the month of June, because June is already here. We want to preview June as we are crossing into the month of June, and you know that one factors that are coming right from the month of April, some of them are still intact, that's going to support the market in the month of June. I will tell you that, especially some stocks are relatively really cheap, while others, because of recovering, are high, considering their high PE ratio we're seeing now. That is one, because of the first quarter result. When matching to their P ratio, their price is slightly a bit high. On that note, we're expecting correction in some sector, and you as an investor, we have seen that the market has rallied in the month of April and May. They are likely to be pullback in the new month. It might be at the beginning of the month. That's why trading on Monday, Tuesday, and Wednesday is important for us to know where the market is going, because at this market has rallied for, you can see it here on this chart. You can see the month of April. You can see that May was even stronger than the month of April in terms of return, and the market is likely to correct. People are likely to take profit at this point. The market have rallied from the 11 years low that March had. You can see the longer decline in the month of March, and now we're seeing the recovery, and even we have not even covered what we've lost in the month of March. But it's a good way. People have entered at the bottom here at March low. As the recovery coming, they've made money, which they are likely to take profit. But I'm telling you, if there's any correction here now as we're expecting, that will give this market recovery a good trend, and it will support a stronger uptrend. And if after the second quarter results, after the second quarter result, people have assessed the market and know where they are. And also with what I said earlier, that intervention from the CBN, the government not sleeping, trying to make sure that this economy recover quickly as expected, that also going to impact the capital market positively. That also may reduce the kind of pullback we're expecting, because now that the MPR has been adjusted from 13.5 to 12.5, is a good thing for the market. This is a positive for the market, and it's going to affect the market positively. It's just because the market is struggling and the economic reality or the happenings is not supporting the economy now. If not, this adjustment just last Thursday here would have changed the face of things in the market. But people are still watching, because businesses are still trying to find their feet after the lockdown. On this note, I believe that once we have seen the second quarter result, we expect that there will be also an uptrend in the market, as we expect that the Q3 GDP or performance also will improve after this coming out from this second quarter, and intervention in different critical sector as CBN is doing and the federal government. Now that they've reviewed the budget again, we expect that it will start implementation, since we are still borrowing, and also the reliefs and the grants that are coming should also support things in the economy. That means we expect activities to also start looking up gradually going into the second half of the year. If that is achieved, we believe that the market will also recover quickly towards the end of the year, the last quarter of the year, knowing that last quarter of the year is always high activities because of the nature of festivity and other things, being it to round up everything. That last quarter is always a quarter that every investor want to look towards, because it gives you an insight what you should expect in the new year. And we expect that this recovery will see in the economy. The market will lead. The market will go ahead to tell you that the economy is coming back. We have seen that now that we are seeing disconnection, within the market and the economic reality, it will also be corrected. But I said it earlier that it's not compulsory that the market must move the way the economy moves. What matters is that if there's liquidity in the market will behave on its own. But the major fundamental for the market, I always say that liquidity and positive sentiment is the key. Once they are there, prices of equity will respond. It is no simple demand and supply. When there is no demand and there is fund, prices will go up. And like I always say, don't forget that the 20% impact of earnings will not be ruled off at all, because that determines what comes to you as an investor. No company will give you what they don't have. That means if the company earnings is not positive, then it's going to affect the price. At the same time, it's going to affect you, because you're not going to get either reward in form of dividend. But if the company numbers are positive, and yes, even if the economy is tight, they will only adjust down just to pay little from what they earn. But if they don't have positive number, you don't expect them, unless those that are very generous, that can go to their reserve, their retained earnings and do. But I'm telling you, most companies don't have the policy of going back to their retained earnings and pay dividend. And also, don't forget that with this situation we're seeing, if you look at the banking sector, we are seeing that the provision for non-performing loan is on the rise. Why? They are factoring in what the economy is going to have, what the economy is going to do on companies, or people that they are giving loan, that the economy is not too right now, most of them will be default, and that also will affect them. And when the bank is making provision for for bad loan, it's going to affect their bottom line, and that also may slow down their payouts. That's why we're saying that looking forward, the banking sector will have to also be very careful on that angle, what we are doing with that sector. There is a sector that I'm sure that dividend will still come, but will not be as high as we have seen previously. But most of the top banks in Nigeria are likely to maintain their dividend policy, but they might not pay as high. If they decide to pay as they said they did in 2019, that will be good for them, and that will be good for investors at the same time. But now that we are seeing all these policies coming, the bank has to also get their own brunt of it, because this is the source of banks to make money. Bank creates money through what? Through lending. And if the interest rate is low, yes, people appetite for loan now, also because of the economy. So most but for me, this is the right time for people to have to take money to do their business, so that they will expand, they keep employing people, so that the purchasing power of Nigeria will still be on a stable note, knowing that without fund, economic activities will slow down. That's why CBN really just slashed this 100 points, just to make sure that cheaper fund goes to the private sector and to sustain their operations and keep them running. And also, don't forget that they have gone ahead to say for those intervention fund that is 1 year interest free, you should know what it is. This is just for them to make sure that companies find their feet within this crisis of virus-induced economic downturn. If this is something that I'm telling you, before the end of the fourth quarter of the year, we have started seeing the impact of all this intervention here, all these moves that the CBN are taking. For me, as analyst and also as an investor trader, I'm telling you that they will still have opportunity to make money ahead. All we just do, let us position. Like also I mentioned, the rotation of sectoral rotation. As we are entering to the month of June, there will be adjustment and realignment of portfolio. I'm telling you that funds will be moving to those stocks that has good fundamental, those stocks that are being managed by, let's say, the white and also responsible management in Nigeria, and that has good corporate governance and has potential to grow. That is why you need to keep your eyes on the market now. Which sector, like we have discussed in our video that is on now, we'll call it a 6th video on strategies, how to invest in this changing market dynamic and recession. We've classified the stocks for different purpose, for different area. If you are the one that investing for dividend, how can you take advantage of the low price now to get those stocks and get them at low price? Or we are waiting to enter when the market pull back again, or the ones we bought when it touched 11 years low in the month of March? Yes, because we bought low, any dividend they're going to give you will be high. Those stocks are likely to lead the recovery. Then they also mentioned in the video, and those stocks are going to benefit from this pandemic as we are now, as CBN and government trying to make sure that they touch different critical sector. Also, they all discussed them. But this central recession is going to help you. There are bound to be some activities moving to the healthcare sector as we speak now, the agricultural sector, knowing that the government is really intervening. CBN is giving them one digit interest. Now they say they for 1 year, it's going to impact positively on those sectors, the agricultural sector, the telecoms, the healthcare. I've mentioned them. You need to look at them and see. But don't forget that banks, as I've said, is what you should also look as an investor. But because of the regulatory activities now, we're saying that the CBN have got MPR, knowing that before now the loan to deposit has also helped have encouraged banks to lend. If you look at the first quarter result of the banks, they've increased their lending just to meet the 65% regulators benchmark, which many of them have met and surpassed. But why they lend more was for them to meet that. And now that they are cutting down the MPR, is going to also slow down the bank's profitability. But for that, the bank is good, but we have to also look at when we are entering. Let our technical analysis, let the sentiment in the market guide us, and the numbers coming from this bank should guide you when you are taking your decision to buy into banking stock, unless there's another positive information that will come any moment from now. But for now, I think it is time for you to do what we call sectoral rotation. You need to move from one sector to the other, looking for where you know that despite the economic slowdown, economic activities that is good, that is, and this that's happening now, that here in this sector you get value for your money. And don't forget that we said that if you look at the charts on the monthly base, you can see the market is recovering. And if you go back here, look at this, the what we call MACD for the month, you can see that it's just looking up, trying to cross the blue line, and you can see that the histogram of the MACD is showing that it's going to go bullish on a bullish trend on bullish line. But if you go to on weekly chart, you can see that the market is already bullish on the weekly chart also. This might extend to the new month, but because there's still opportunity. But on the daily chart, the market is already at overbought region, which I will tell you. If you look at this chart here, if you look at this chart, okay, let me call up this relative strength index and money flow, so that you can see. This is the money flow index. You can see the money flow index on a daily chart. It has gone up here, pull back. They're trying to go, and also at the same time, it has already showing a sign of coming back on a daily chart. This tells you that on a daily chart, the market might slow down. That's why we're talking about profit taking. But if you look at your relative strength index, I tell you that the market is already at overbought region. Look at it here. We can see this. You can see even at this point it's coming down already. Before you can see it has surpassed this line, and this line is what the 70 30 or 80-30, depending on the scale you are using as analyst or your technical tools is using. But this one is between 30 and 70, and when market cross anything above the 70, it tells that the market is at overbought region, and the possibility of correction is high, and correction will come in the way of profit taking. That's why on daily chart the market is looking something I would say dicey for correction. Yes, on the weekly and monthly chart the market is very okay, but because this daily chart is very important, and you see the activities in the last 3 trading day of the month after the holiday, the market behave sort of there was kind of oscillation in price movement and performance. On that note, you need to be very careful if you are taking position, especially on those sectors that have rallied within this month of May. Those sectors that have rallied, or less those sectors that still has potential. One, knowing that in the month of July, they will start seeing the first half of the year result of these companies, and that also will open your eyes to know. But for investors like those that are getting the how to invest with earning season, you should know, if you are waiting for the earning season, what time and when should be in stock, and how should it be. Your chart and the dates should guide you the kind of stock you should buy. Then now that we're expecting that the bad economy or lockdown is going to affect majority of the listed companies' performance for the second half of the second quarter result, but there are some sectors also in that on NSE that the second quarter result will be better than ever. Why? Because during that lockdown, activities in those sectors has improved. Business has improved because of what? Because of the lockdown and because of movement was restricted. On that, you should also know how to align your portfolio, and because those numbers coming from that sector are likely to be better, and when it's better, it's going to support their price, and their price will go up. Why those are going to post numbers that are not too impressive will adjust down, and that one adjusting down is where you are keeping money to enter low. But those that will go up, you also want to position so that when it goes up, you like to say in any market situation, there are always opportunity. It's for you as an investor or trader to know how to catch this opportunity. That's why in those in buy and sell signal, I'm telling you, they are getting value for their money. Yes, I might not just say what will I do now? I might not say what I'm getting, because once I give the value, once we give the signal, we're off, and we're always there to guide, because we want to tell you when to sell and when to buy, and you want to look at chart for you to give signal. That's always tell people that if you're a trader, you need to have tools. Have tools. It's very, very important. You can't say doctor without having tools. If you really want to turn trading as business, trading as what to do, get the tools and prepare and train yourself. It's all about skill. Like I said in the last two CD, that it is not the certificate that you are a PFA. Those things are advantage. It makes you more better in the line. But if you have your tools, you can still be making your money from your home. There's research we are not doing now, that in the month of April and May, that is the retail investor that made huge money from this market. We are getting our data together. That even because the PFAs we are looking elsewhere, for bond and all those stuff. Why those big money also at the same time that cannot enter stock that are very small, and even enter the stock, they don't want to push it up. No, but the retail investor will be able to take advantage of opportunity in the market, and they make money. Why most big traders, those iPhone managers, most of them were this stock. When we go, can we sell? And the volume, I know that money stocks are not so too liquid. There were a lot of constraints for them. But for retail investors, they were able to make through, and they make money this period. Once the report is ready, I'll also let you know. It's a sign that the retail investors are the ones making money in the market, and you want to be one of those retail investors. That's why you need to, if you are not in the buy and sell signal, you need to subscribe now and join the rally, and join the winning team. Let me do that word. Join the winning team, because I'll tell you, when we started that buy and sell signal in 2007 April, we are just about 8 today. We are more than even 200. You need to be there so that you'll be getting signal and know what to do. The only thing that information is what rule the world, and even the market. If you have information, take advantage, you make money. That is why if you're able to know at the right time, before that, go in there and come out. Yes, I'll tell you, anybody will tell you that you don't lose in capital market is telling you big lie. Let your winning side be more than your losing side. At times, your losing side can be more than your winning side. Or you exercise patience and change strategy to correct and come back. And especially if the market is where you are getting what you need, you don't need to stay away from the market. Even when you are making loss, you find strategy to manage your loss, recoup it, and continue. You don't say because you drink water today and you hear that water is killing somebody elsewhere, you don't say because water kills somebody, you don't want to drink water again. No, this same market that people have gotten their finger burnt, the same market people are making their source of livelihood. People are making money. All you do, change your strategy, expand your horizon, get people that are also in the market, share ideas with them, rub mind with them. Before you know it, you are there. On this note, we'll draw the curtain here. God bless you and enjoy your new trading month.